Hello everybody, welcome to the technical analysis webinar. Just a quick systems check before we get going. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. I'll be happy to try and make adjustments if needed. As always, keep in mind that no one trade is guaranteed to profit. I think we all understand that, but in some way you want to manage your risk in a way that makes sense for your balance and your risk tolerance, etc. You can make use of stop losses and hedge positions. Also, we have some unique tools that I'll show you on our web trader and Avatrade Go app that help you to manage risk maybe in a more effective way than without these special tools. So it's something I think can be helpful. We'll take a look at that within the trading strategies that we go over. Keep in mind also that what we go over is not meant to be financial advisement, but it's coming from an educational perspective. Real quick, what is technical analysis? Quite simply, it's looking back at the historical movements on the candlestick charts and looking for patterns, repetition, things that may lend some predictability to the movements. We might find important price levels that we could draw lines for, which we could call support and resistance lines. Looking for different types of ranging patterns, trends, etc. That's technical analysis. And then we try and use that to our advantage to try and predict future movements. I think technical analysis tends to be more effective if you understand the price levels and you draw them manually rather than relying only on indicators to blindly tell you when to buy and sell. So we tend to lean on the manual methods of technical analysis within the webinars that I do. We also like to combine things with our understanding of the fundamental news as well. I think it's important to understand the fundamental aspects of what's happening in the news so you can understand basically which way is the wind blowing today, which way might you prefer to try and find entry points, and then you do your technical analysis with that preferred direction maybe in mind as you look for opportunistic entry points and exit points with the technical analysis. And that's basically what we'll be doing. We'll take a quick look at the fundamental news and then get on the web trader and AvaTrade Go even and take a look at what opportunities are there and how can the tools on our platform and our app be helpful. So let's go ahead and take a look at a couple things that are happening in terms of the news. We can take a look here. Wall Street scales record peaks on earnings cheer, Fed meeting in focus. So that sounds positive. Sounds like positive sentiment. When we talk about cheering the earnings that are coming out, it's earnings season as it's called. The major companies are reporting their earnings numbers, their financial numbers, as publicly traded companies need to do. And this tends to happen quarterly with each of these major companies. So there have been some good numbers that have come out, and Wall Street is, as the headline says, cheering these earnings numbers that have been coming up. So some positive sentiment there. We can see that in the numbers here. US 30, US 500 futures have been green all day. The market opened green, matching that. On the actual Dow Jones and S&P 500, we see the volatility index is down. That's usually what we see in a situation where there's positive sentiment. Then usually the fear index, the volatility index, as it's referred to, is down, which it is. It's down about 2%. US dollar's slightly stronger, but not much. So that all lends to the idea that, hey, there's some optimism on the market right now. Specifically, the Australian dollar took a dive. The RBA, the folks making decisions in Australia had a dovish tone today. And so the Australian dollar specifically weakened. So, if there's still a lot of stimulus out there, that tends to weaken the currency for the country that's giving all of that stimulus. So Australian dollar took a little bit of a dive. specifically. Oil's been a bit choppy. We know that oil has been very bullish of late with all the positive economic sentiment that's been out there. It's helped to drive oil up. There have been predictions of 95 a barrel, 100 a barrel, etc. So there's been a lot of bullishness on crude oil, and the OPEC nations have been talking about, hey, we're not going to increase supply dramatically to try and help these prices come back down. The OPEC nations tend to like higher oil prices. If that's what they're selling, they're going to make more per barrel. But they have to have a balance between increasing production and prices. So they're talking about increasing production some, but not as much as maybe you and I, when we go to the gas pump, would like to see. Because if they increase production even more, that helps bring gas prices down typically. But there's a big OPEC Plus meeting this week, so that will be in focus for crude oil. So it's a bit of a choppy trade right now for crude oil because of that OPEC Plus meeting that's coming this week. So we may see some ranging movements on crude oil, fundamentally speaking. That would make sense. Ranging means up and down, up and down, up and down, until that meeting gives us a consensus on, well, what are the OPEC Plus nations going to do? This is a big one. This headline out of Reuters. Wall Street banks step up preparations for Fed tapering volatility. That's interesting. And if you don't understand what that means, the U.S. has had this bond buying program from the federal government, buying bonds from the major banks to help prop up the banking system and the economy. Well, the economy's been doing so well for so long, and maybe some have said too well, with some hyperinflation there with gas prices and grocery prices, etc., even housing prices. The Fed, maybe it's believed, is going to say soon that it's time to start to taper back some of this stimulus, some of the stimulus measures and the bond buying. And that could create a stimulus, an impetus for a sell-off on Wall Street potentially. So we have to keep our eye on that. That's a bigger headline than some might realize. So that's in the coming days and weeks to keep an eye on that. Good question, Arthur. Right now I'm looking at Reuters. I'm looking at investing.com. There are a number of websites you can use. Okay, and I'm about to show you, we have some fundamental news that you can use and some technical analysis that you can use within our platforms as well. Okay, so I mentioned when we started that the AvaTrade Go app and our web trader platform help you to manage risk. They've got special features that will help you with your fundamental and technical analysis. So let me real quick show you. If you could point at our trading platforms link, let's say you're on your mobile device, then you can go click on AvaTrade Go and download from the major app stores. This will take you to the major app stores, these links, and get the AvaTrade Go mobile app. And it has Ava Protect, which is a special feature. In the order window, it helps you understand your potential profit to your take profit, what you're risking to your stop loss. It does those calculations for you. And I can share my screen with you. Let me bring this over here and expand the view of my phone. And perhaps we can take a look at the AvaTrade Go app. Let me get it on the right screen. I've got a couple screens here. So there we are. And maybe I'll go full screen view. There we are. Okay, so this is the mobile app. So if you log into the AvaTrade Go mobile app, and I would say get it on your mobile device. It trades right on top of the MT4 and MT5 accounts, but it has special features that you won't see that will help you out. So if we are talking about help with your, let's say, technical analysis that we're talking about in this webinar. So what we can do is bring up some special features. I tapped on the tab on the lower right-hand corner here, okay? And your trade history, everything's there. But what I'm talking about is market buzz, that brings you some fundamental news on stocks specifically. You can pull up the most recent articles that are out there. Really cool features. Talking about technical analysis now. So if I tap on something like market buzz or analyst views, Forex featured ideas, which is this one, or analyst views, we're going to get technical analysis done for us. So I tapped on analyst views, and there's the most recent signals coming in. These are free signals coming in with outlined everything to do with the technical analysis, the reasoning behind it. So let's look at maybe USD JPY, okay? And why do I choose USD JPY? Well, we just did a quick fundamental review of the headlines, and we say, wow, it's positive sentiment. We saw the US dollar was strengthening slightly. They're cheering the US economy and the earnings season, so that should help strengthen the US dollar, right? If there's talk about cutting back the bond buying program, the stimulus measures in the US soon, that should also strengthen the US dollar. So we've got multiple reasons fundamentally for the US dollar to strengthen. And why should the yen weaken? Well, there's positive sentiment. The yen is traditionally a safe haven currency. And so if we've got reasons for US dollar to strengthen and the yen to weaken fundamentally, which we do, then it makes sense. Let's look at the signal that's telling us to buy on the USD JPY, because fundamentally it makes sense. So let's look at the technical analysis. And so as we scroll through, we see it's telling us the breakout move is expected to go up. We see the price level where there's resistance, and the prices that they expect. If it breaks this resistance, it looks like it's saying to get in on a further climb potentially. And as we look down here, it says the preference, the upside prevails as long as 113.54 is support. So 113.54 is way down here. That's the support level. So as long as it doesn't break below that price, it's a buy signal according to this signal. There are alternative scenarios. If it breaks below 113.54, that's this level here, then it's saying then that's a sell signal. And it makes sense. If it breaks the support, then something happened. If it goes down and breaks below this price. And so a sell stop pending order below that price would make sense. And a market buy, according to this signal right now, also makes sense. Okay. So you've got the signals here that can then match up to what we're looking at with our quick fundamental evaluation as well. And so we can try and match all of those things up and try and make sure that everything's in alignment. And so if we go back then, okay, we say, okay, USD JPY, we see that signal. So now if I want to go back on the app, I click on the arrow there. And by the way, it says real account. This is basically a demo account I'm using. I'm using a real account, so all the features will work. Sometimes on demo accounts in some regions around the world, you're not going to get all the advanced features that I'm showing you to work on a demo account. Sometimes it needs to be a funded account. So now if I go here to my home, and I wanted USD JPY, so I can click on the search down here. Okay, let me very easily come up with USD JPY. There it is. So just tap on that, and now I can take a look at the chart and see if I agree, right? So I can, just by pinching on the phone on your mobile device, you can change the size of the chart, and we see the same thing. We see that support level down here, below 114. You could draw a line and say, okay, support is down here. We see it's trying to climb, and the fundamentals maybe are on our side, the technicals are on our side. And if you decide, okay, let me go ahead and buy on this, look at the risk management features you have in the app then. I'm combining all the tools in our web trader or AvaTrade Go. And by the way, I'm on AvaTrade Go, and I'll show you soon that the same thing exists on web trader. I can protect this with AvaProtect, special tool that I can protect by the day, by the hour. It's only $22 to protect this trade size, 10,000 USD trade size, only $22 to protect for a full day. maybe I want to go longer and protect for 2 days. Look, it's only $31.50. And if I know there's FOMC committee, there's all these big announcements tomorrow, which there are. If you look at the economic calendar, there's all kinds of large announcements tomorrow out of the US that could swing momentum one way or the other. And you say, wow, I've got a shot that all those major announcements could swing momentum in my direction, right? Or it could swing momentum in the opposite direction. So I could protect for 1 day, 2 days, and cap my risk at this during the protected time period, shows when my protection ends. And, you know, if I program my take profit, I can take a look and decide that I want my take profit price to be at a certain spot. And so maybe I say, you know, 114.50 or 60. Okay, 114.50. My potential profit is 50. Maybe I say I want, you know, 120 as my potential profit. And so, as my take profit, I should say. And so all I have to do is program the price I want, and there's my potential profit, 536. So it's calculating for me my potential profit, and it'll do the same for the risk. I have one person saying my sound is off. I don't think it is. Can you type okay for me if you're hearing me all right? Okay, great. I've got enough responses. Looks like everything's okay. Thank you. It's just the one person, and they've already left, so I don't need to type a message for them. Okay, so then I can put my stop loss price, and you know that signal told us the exact spot that we should put our stop loss, and so you can modify that. You can put what you want, whatever you think is best, right? But we've got a guide from that signal. If I put my stop loss, let's say at 113.25, there's my risk, $57. So immediately I can see my potential profit, my potential risk, and maybe 120 is unrealistic for my take profit. So maybe I'm looking at 117, and I say, wow, that's realistic, 117, or whatever I like, right? Looking at the price levels on the chart. And so once I have it set, I know I'm protected. I don't necessarily have to have my stop loss in, right? If I'm using AvaProtect, I can add a stop loss later after my protection would end, because you see I'm protected for 2 days, $31 risk, potential profit 272, and maybe I like that and I confirm my buy. Okay, there we are. Now I've got my position going, and maybe I go back and take a look at something different. Go back home. Now, obviously, I can see that I have open positions. I can check on that. So a lot of different features here you see in the app, and you'll also see that in the WebTrader platform. Let me just go ahead and minimize this view, and we'll go to my main screen here. Let me get this off, out of the way. And now we're on the main website again. And I think what we'll do is go into the WebTrader now and take a look at the WebTrader and see how that compares to the app for using some of these features. And I think you'll see that it's just as usable, if not maybe more so, because you can be on a full screen instead of your mobile device. But what we'll see is that all of this is very helpful for a strategy. So if you log in here, you'll be on the WebTrader platform here. And it has a similar look and feel to the mobile app. And what we'll see, here's my position, right? I opened it on the app, and there's my position, USD JPY buy. I can look at the info on it and see it's protected, AvaProtect. Cost $31.28. I paid that up front. Now I'm risk-free for 67 hours and 37 minutes more. As long as I make more than $31.28 on the move, I made back what I paid for the protection. And obviously my potential profit is even larger than that. And I can close it early if I want, end the trade, end the protection, or let it run. Obviously in this case, it makes sense to let it keep running. And now if I go back to the trade area, and let's maybe bring up something different. I don't know, gold. And as soon as I type gold and click on it, I've got the chart up. I've got gold at the top of my list. I can put it in my favorites list, right? Click the star, and then if I go to my favorites and I scroll down, I'll find gold. Here it is. Okay. Let's expand. Let's click on the gold buy. Get the gold chart up. I'll exit the order window for now, and let me expand to full screen on my gold chart. Now, simple to use to scroll in and out. Just with your mouse, when you're using a mouse, roll the wheel, and that gets you in and out. Arthur, I'm glad you love AvaProtect. I agree, it is very useful. It's available on all FX pairings, gold and silver. So it's great to use as part of your risk management. So I'm on gold right now. And what happens to the strength of the USD if the US starts to taper bond buying and the US economy is strong and they're cheering earnings season? The USD might strengthen. And if that's the case over the next few days, doesn't mean gold won't go up for the January effect and some of these other seasonal things in the longer term. But maybe in the shorter term, we could see a strengthening of the USD, and fundamentally that could help pull gold down temporarily. So if maybe fundamentally you believe that, and I'm not saying you have to believe that, but if you did, then we're looking at a gold chart. Let's get off the 1 minute candles. Let's go maybe to 1 hour. And I'll scroll back and I'll see, okay, gold has a bit of a resistance level here on the 1 hour candles, and it's reached a bit of a support level here. And I can draw those lines anytime I want. Click on the price level line, which is a straight line. And I can try and find a price level that I think there's support, which looks like it's right about there. Okay, so I see on the 1 hour candles, it hits and goes up. It hits and goes up. It hits and goes up again and again at this price level. Here it took a lot of momentum. Look at the size of this candle. Look at the momentum it took to break this price level. It was a really big movement to get through there. Then it became resistance. Then it became kind of a gray area, and up it went. So now we see gold coming back down. So what we're seeing is if it breaks below this price level, then maybe there's momentum to continue down further. What kind of pending order could you put at, let's say, this price level below this support level, that if it breaks below like this momentum did, that you might expect, if it breaks below these wicks, a continued momentum down? What kind of pending order then would enter if the price drops below this price level here? Okay, if it drops below this price level and you want to enter as a sell down here, what kind of price or pending order, I'm sorry, would get you in at a price level, let's say below 1784, and let's say down here at 1780 even? What kind of pending order sells from a lower point? Sell stop, exactly. So we could prepare a sell stop that if it breaks below this support level, technically speaking, that would be a broken support, and that would confirm maybe your idea that, hey, maybe the USD strengthening today could break that support level, but you're not going to sell from above the support level. The technical strategy is wait for it to break the support, and then you sell. So maybe if it breaks below 1780, let's say 1779, 1778, maybe then you say, okay, then I want to sell. So let's get out of this full screen view. Let's then say, okay, let's prepare to sell on gold. And I had a question just pop up. that why is AvaProtect not available on MT5? And that's because the MetaTrader 5 platform is what we might call a more generic platform that's available at all brokers. Brokers basically rent the MT5 platform from the folks who made the MetaTrader 4 and MetaTrader 5 platform, and it works fine to trade on with us, but it doesn't have our custom-made features built into it. So in order to trade with AvaProtect and to have all of these risk management tools to calculate your potential profit and calculate your risk, your stop loss, potential loss, etc. In order to have these tools, you need to trade on our web trader or on AvaTrade Go to place your trades. You could still use the MetaTrader charts if you want, but I don't see why you would need to, because we've got everything here on our platform. You will see the trades you place here. You will see are on your MT4 and MT5 account if you log in. It's the same account. It's just a different user interface that has more user-friendly features, more advanced features for you to use to place your trades and to do your analysis. And really, you may find you really like this platform better anyways. And AvaProtect, these features, you only find this at AvaTrade. So you're not going to see it anyplace else. And so there are some questions. Do you wait for the movement to break the support and then retest it back up before you sell? You can do that if you want, but if you look here, look at this breakthrough. Once it broke, it just kept dropping, right? By the time it came up and retested, you would have already made a profit. So there are different ways to go about it. So I'm not here to tell you there's only one way to trade. I'm just showing you some ideas, right? And so let's say you wanted to sell on gold only if it breaks below 1780. So what's nice about this platform for pending orders, you see here where it says execute when price hits. If we say, I want to sell stop pending order, to sell from a lower price, guess what? On this platform, you don't even have to know that it's called a sell stop, because you can get confused. On the MT4, MT5, you go to you have to switch to pending orders, and then there are 4 types. There's a drop-down window, and you have to say, do I want the sell stop, the sell limit, the buy stop, the buy limit? What kind of pending order do I need to put to sell from a lower price? Yes, it's a sell stop, but you don't have to know that on the AvaTrade Go and on the web trader. So all you have to do is say execute when price hits. I can tell it when the price hits 1778, for example, I want to, and if I'm on buy, it'll buy when it hits that price, right? Execute when price hits, I put the price. Or if I'm on sell, it'll sell when it hits that price, okay? So I can say 1778. I can tell it the trade size I want. Okay, maybe I want 0.2, okay, 20 ounces of gold. And I can program a take profit. Maybe I think it'll drop to 1750. I can program my stop loss. Maybe I only want to go back up $10 per ounce. So if I get in at 1778, 1788 maybe is my stop loss. So now I say, okay, 560 potential profit, 200 possible loss. Okay, that's my pending order. I've got it ready. And I never had to know what type of pending order. I'm just telling it the price I would like to enter based on what I drew on my chart. I want to enter down here if it breaks the support. I put the price, it'll automatically make it the right type of pending order. If you then look at your pending orders in the MT4 and MT5, you'll see it's a sell stop. The web trader and AvaGo will make it the right type automatically. You just tell it the price, and the system's smart enough to know what kind of pending order it will be. So there we are. My pending order's waiting for me. You see here under orders now. There it is. Pending order, ready to go, sell. It'll sell when it hits that price. Simple, very simple risk management, and very simple in terms of preparing orders like pending orders, because you don't have to know the name, the technical name of it. Anna Marie, good question. You cannot use automated trading robots, what we call EAs, on the web trader and AvaTrade Go. So that's a reason why, hey, we do have the MT4 and MT5 platforms for those types of advanced purposes for auto trading. So absolutely, you can put your EA robot on your MT4 and MT5, and you can do all your manual trading and everything right from here in the web trader and AvaTrade Go. Taking advantage of free signals that usually cost you money, by the way. The signals that you have here are free. And you see it makes sense. You know, our USD JPY, look, it's up in profit already. Why? Because we checked the fundamentals, we checked the free signal that came in, we made sure our quick fundamental news headline check matched the signal, and it did. So we can see, hey, the signal even makes sense to buy on the USD JPY when we know there's positive sentiment, which would lower the strengthening of the yen, and we know there's, you know, strengthening of the USD with positive earnings sentiment. So everything made sense fundamentally for the signal we saw from the Trading Central signal, okay? And by the way, you can go to the Trading Central from here, okay? Same thing. That's what we were looking at, the analyst views. And you've got Market Buzz and all these advanced features for Trading Central that you can access through here. So we enacted a trade on gold, right? Let's go back. Let's go to our favorites. Let's look at gold again. Maybe we'll bring up the gold chart and let's expand it. And let's go to maybe 4-hour candles. Scroll back a bit. We put our take profit at about 1750, right? Let's take a look at, did that make sense, technically speaking, for the pending order? If the pending order triggers, if 1780 support gets broken and we hit 1778 and it triggers our sell pending order, this order that we prepared here, does it make sense to say take profit at 1750? And we look down here and we say, wow, look at this support level right there. Okay, this was a big move on gold. You see, again, a breakthrough candle. Remember I talked about breakthrough candles? This was an old support. I mean, it's a support level now. And you see the momentum came up on the breakthrough candle and established a higher support. Support, 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 again and again, again, up we went way up here. So if this does break the support at 1780, this one up here, and triggers our sell, we don't have another major support level until around 1749, okay? And I kind of knew that in advance, that there's a major support level down around 1750. So our pending order, if the sell order triggers, and there's a big drop in gold, we've got our take profit at a spot that makes sense at 1750, right at this support level, just above the support level at 1750. And you could play around with that. You could say, oh, 1752 maybe, 1755, somewhere a little further above the support level to make sure that if it's going to bounce up off this support, if it does drop to it, that you take your profit before it maybe bounces up off the support. For the bigger move, maybe for the January effect move or whatever the bigger picture is on gold that you may feel is in the opposite direction. But you see, you use your technical analysis to determine entry point. In this case, waiting for a support level to break before we would enter, right about in this area here. And then you also use your technical analysis to determine take profit, which right before a major support level down here makes sense. Okay, so Richard, good question. You're asking in gold, what is considered 1 pip? Usually, if we're talking about something other than Forex pairings, we actually refer to it as a point instead of a pip. And 1 point is typically, if you look at where's the last decimal, okay, where's the last decimal? The point sometimes is referred to as the movement of the last decimal or the movement of the second to last decimal, right? And it just depends how you define a point. Now, you could find a different definition of points, right? A lot of times, like if the Dow Jones goes up 100, they'll say it went up 100 points, but they're talking about 100 whole numbers. And they're not actually talking about the last decimal point. So it depends who you ask and how you want to define it. But in terms of the platforms, they're looking at that last or second to last decimal point, okay? depending on how many decimal points there are. Usually it's the second to last decimal point. Okay. For example, if we went to Euro USD and we're talking about pips, you'll see 5 decimals, but the fourth one is the pip, right? The second to last number is usually the pip or the point for whichever instrument that we're talking about. It's a very good question. Okay, so why don't we look at a different instrument? I think an interesting one is the S&P 500. It's been moving in a way that maybe you could take advantage of with the fundamental news that we're talking about. So again, if I just type like 500, look how easy the search tool is here compared, if you've ever used the MetaTrader platform and you're searching through all the listed instruments, there's no search tool. You're like scrolling through all of them to try and find the one you're looking for. And so very simple, boom, US 500, there it is. I click on it. Here's the chart now that pops up automatically. And I want to show you something interesting on the chart. If I go to full screen chart here, let's get rid of the order window for now. And let's go to 1-day candles. You see a huge, huge uptrend, right? What did I talk about that could cause a scare in these all-time highs, a pullback from these all-time highs that could be coming soon, that the Feds in the US could talk about doing soon? What was it about the bond buying program, the stimulus measures? They're looking to taper. Remember, taper, that means cut back. And that could be happening soon, or they could say that they're going to start it soon, which could create a scare even before they do it. So, Wall Street and the markets love free money. They love stimulus measures. And, it's been causing some hyperinflation in some areas of the economy, housing, groceries, gas. So they're looking to maybe cut back on that. And if they do that soon, you could see a reason for a large pullback in these major indices. So as we look at the 1-day candles and we see this huge bull run up, look at these bull runs over here. Look what happened to pullback on the 1-day candles. So let's look at 1-week candles maybe. And we scroll back to get a better view of the candles, and maybe even 1 month we could look at. And that's zoomed in quite a bit on my chart. Just give me a second here to get it to roll back. I think I'm going to refresh my screen. Just give me a second. We'll get off the 1 minute. And we can see on the 1-week candles that we've reached an all-time high. Okay, we go off to the left. On the 1-week candles, we don't see any other candles over here going back years, even on the 1-week candles. So it tells us, hey, we are at an all-time high. Is it possible that that we could have this pullback? And fundamentally speaking, it makes sense that we could. Okay, and so if I look at the smaller candles, let me go to 4-hour candles. And I'm looking to see if maybe I have a resistance level that formed on the smaller candles, 30-minute, and I see, okay, it's a little bit of a pause here. It hit, and there's a wick. It hit, it pulled back. It hit, it pulled back, and it looks like it's trying to start a little bit of a downtrend on the smaller candles. If I go even smaller, 5-minute, I can say, okay, now I see a bit of a hesitation. It hit, pulled back. It hit, pulled back. So without risking much, I could get my, if I deem that this is a small resistance level up here, this line that I drew, I don't have to risk much to get above that. And my potential profit, if there's a large pullback soon, could be quite large. So if I start then going to 2-hour candles and looking for some old support levels, maybe 4-hour candles, scrolling back and saying, okay, maybe this line down here, if I want to draw a line and say this is a old resistance level here, resistance, resistance, resistance. Then once it broke through, we haven't dropped below that since. So if I say, all right, if I do a market sell right now, let's say, and then I want a stop loss, or I mean a take profit, down here around 44.73, which may be a new support level if there is a pullback, then I could round that off and say, hey, 4,500 makes sense. That's above that support level, and that's a nice payout, 121 whole number points down, right? Or 1,210 points if I'm using the second to last decimal number as the point, however you want to define that. But it's a much larger potential profit to 4,500, which gets you out before this support level we drew. And I don't have to risk much to get above the all-time high with my stop loss, okay? Taking a shot that maybe the fundamental news is on our side, the technical setup is on our side, that's for sure in terms of potential profit to risk. And so maybe you like that setup. And so now I go here, minimize my chart a bit, and if I want to try and set up a market move, then that's something I obviously could do. So I go click on sell, and if it's a market move, then all I need to do is set up my stop loss, and maybe I say, okay, I'm going for over 124 whole number points profit. So the price right now is at 46.21, 22. So maybe I put my stop loss up at 46.50. Okay, so I'm risking what? Less than 30 whole number points to my stop loss. And now I play around with my trade size, and it tells me immediately what I'm risking. So maybe I'm going into this saying, hey, I want to risk 200. Whatever amount makes sense to you, right? I'm working with a demo, a fake real account here, if that makes sense, with a demo balance. That if I put 1,000 risk, it's 1%, right? So if I'm going here and I'm saying, okay, I want to risk 1,000 with my stop loss where I just set it above the all-time high, then I can play with the trade size until I see, okay, there's my risk, 1,026 or 997. That's even closer to 1,000. So I can do 35 ounces. You see how the risk management's done for me here. My take profit, I said I wanted to be down around 4,500 because it's before that major support level. So I'm going for over $4,000 profit and risking less than 1,000. So going for over 4% profit on my 100,000 balance and going for a 1% risk. Okay, there's my market move. Done. Okay, and by the way, soon on the equities, on these indices, I'm told it's coming soon, AvaProtect will be available. Not just on the FX pairings and gold and silver, but on the major indices as well. US 500 included in that. So soon we'll have AvaProtect you could use for, by the hour or by the day protection as well. Instead of the stop loss, you could be using AvaProtect. So now we've got a trade. We've got our stop loss above this line that I drew as the all-time high resistance with a much smaller risk than the potential profit that we're taking before this old resistance, which we would think would act as support now. Okay, so if I expand this chart again, you see we've got our stop loss above here, and our potential profit is much larger to take at 4,500. I'll draw a new line. Our take profit we put here. Okay, so very easy setup, and you see we're getting our take profit before that support line if this moves the right way. All right, everybody, any questions before we end things? We've been going for about 46 minutes. I think it's a good time maybe to call it quits here and let you all go do some trading. I would encourage you, go to Trading Central, go to the analyst views and Forex featured ideas. You'll see the free signals giving you some ideas for technical analysis and moves that are recommended with the signals. And then you could pull up the charts and set up your lines, go in the direction that the fundamental news makes sense. If that lines up with the signal, boom. Use the lines, draw lines like we did here, support, resistance, measure your risk with our tools here on the web trader and AvaGo, and make some trades this evening. that makes sense with the technicals and fundamentals built right in from the web trader and app. All right, everybody, you're welcome. Thank you for joining. I'm glad you enjoyed the session. And good luck with your trading. We'll be back at it on Thursday at 11 a.m. UK time. Until then, good luck with your trading. Bye for now.